Yeah, I would say we're pretty fairly valued. We've had certainly hot areas of the market. We're starting to see a little rotation into sort of the out of favor areas. So I think that at least what we're seeing is that, this rally is broadening, which is a good thing. And, based on the earnings we're seeing and what analysts are projecting, which may be a little bit high, valuations are. I will absolutely agree with Lee and say they're full.
Hugh, would you be concerned if we had a quick melt up? As Lee mentioned, he might get a little bit bothered about the market at that point?
Yeah, of course I'd be very concerned about it. I agree with him that at least at current levels, we're not significantly overvalued. I think we're about 2% above the levels we should average for the current quarter, maybe about 5 or 6% below the level we should average for the fourth quarter of 2020. So valuation is a little bit stretched, but it's certainly not overvalued. And I think he hit the nail on the head when he said, look, there's not widespread, he called it euphoria. I'll just call it optimism. You don't have the kind of levels of optimism that ordinarily characterize the end of a bull market. But believe me, if we had a significant move, this so-called melt up in stock prices, we had a speculative surge, and we got a big increase in optimism, and it became euphoria, then I would say we're probably signaling the end of this current bull market. This bull market's not going to go forever, folks. Trees just simply don't grow to the sky. So too much euphoria is not a good thing.
No, they can get awfully tall, though, Hugh. We know that. Jack, 3,000 is the target for the S&P that you have. You said it remains intact. We're above that today. Do you need to start raising where you think stocks can go over the last couple of months?
I don't know. I mean, again, it's a year-end number, so it's we're only a month and a half or so away. So, no, I feel pretty good about the 3,000. We put that there at the beginning of the year. So, all in all, I think the market has kind of followed the path that we had expected. My sense is that, it will be hard to get a melt up. I just don't see, especially with the headlines, the valuation and the earnings for next year, are great for 2019, 2020. But if we look much farther out, one of the things that we require is a 90% success rate in making money over a 7-year holding period. And historically, that was really easy to do with the S&P. Lately, you needed to do it with diversified equities. Nowadays, we actually can't do that anymore. And so we had to take money off the table mid-year. And we're going to stay with our dry powder and use it as an opportunity to get in with a pullback.